Hello all, this is just a video response to a comment made by Pip Me Up in the Forex Factory forum. Uh, Mate, I had a look at your screenshot you put up there. It took a bit of working out. I was a little bit confused, had to read it a few times, but that's just me, I'm a bit slow sometimes. But I like your thinking, and I'll just run through what I can see on your chart there. Now, you've used the Great British Pound US dollar from around July this year. What I've done is this blue vertical line on my chart here. It's basically the start, the left hand edge of your screenshot on the forum thread. So I'm just going to run through the trades prior to that so we get an idea where we come into and just discuss how I would have traded it. So obviously we're to the left of your screenshot at the moment. I'm just using this as an example. I'm saying this blue line was the entry on to the upside, and I've just started marking a few of the yellow lines in. So we're trading to the long side. Prices come down below them, then back up. So we'll get the SAR moving. I'm not saying it's a trade I would have taken or anything like that. I just want to run through what happened prior to the screenshot. So we're just heading up, as you know, we're leapfrogging the yellow lines. Gets a bit tight in here because that one's there. This one here is a little bit higher. See, again, it's dropped below and gone back up on that last one, so you can move your SAR up to there. No problems. Had that big jump up now. And up to there. So there's one thing I want to explain here before I move this one up. Because different brokers use different price feeds for their charts, especially the 4-hour charts, it may get to the stage where your chart is different to my chart with candle high highs. I may have a high high, you may not have a high high. It might be just a couple of pips in it. And this is probably a good example here. This candle here and that candle there. The candle to the right is 1.2 pips higher than that candle to the left. Doesn't look like it on a 4-hour chart, it's hard to tell, but yours, that may be lower, so that could make a difference. Just be aware of that. So we'll move up to the left one and we move up to the right one. So we've still got this bottom line here, and we've got a new high there. So what we've got is we've got price coming out. Remember I drew those trend lines across there, price going back in. So SAR gets moved up. Pretty straightforward. And we have another high just there. Now price does come down and go back up. It's, if I was going to use my trend line type thing, it doesn't really come back up over the trend lines at all, back in the yellow lines. So I'd probably just be tempted to leave SAR there. We'll just use that as an example for now. Get rid of that. Alright, so now we're going to the downside. This is what I'm trying to so we've got a break. So as you know, the top yellow line moves down to the bottom of the candle and breaks that. The red line goes to the top, so that's my new SAR, stop and reverse. And the blue line is the entry point. So we're just looking for new lows till we get all 4 yellow lines in play, which is there. So all 4 yellow lines are in play now, but prices are still within them. Take it down to there. Here's technically a break, and if you wanted to, let's just for argument's sake, I wouldn't worry about it because there's a gap. It's near the end of the week, obviously, but just say for argument's sake, we bring the SAR down. Not only are we locked in a bit of profit, what have we locked in there? 159 pips. Yeah, alright. I wouldn't do it, but let's just say we have. Just to give you an idea. So price comes down again. And price comes down again. Alright, so now price goes up, which obviously breaks the SAR, so now we're to the long side. So that goes up there, that goes down there. Took took that profit. Where did I say put that there? Right, that yellow line goes there, and as you can see, doesn't last, comes down and breaks us again. So we've taken a loss there, 114. So we've given back 3/4 about of how many we just made. That's not the worry. This is just an example. Just move these yellow lines out the way so we know what we're doing. So take the top yellow line to there, red line goes up there, blue line comes down there. So take this next yellow line down, next yellow line down, next yellow line down. So now we've got all 4 yellow lines in play. We're short. Yellow line. Let's just entry point. Yeah, it's no worries. Another yellow line. Still haven't pulled back out of the yellow lines. Yellow line. Now we've pulled back out of the yellow lines, and our SAR is there. So our point of entry is there, SAR's there. So we're locking a little bit of profit, alright? Now, as you can see, price shoots down. It shoots down nicely, so it's all good. Now we're on your screenshot. Pip me up. So we're just moving down. So just bear with me. I'm just going to go at the bottom. Alright, let's have a look, see what we've got here. So we've moved down 526 pips. So I am suggesting what we would do is we'd bang out 200, which is roughly that level there. Where my little thing is, little line. So we out there, and because the SAR is on the good side of the entry, there's no use worrying about a break-even stop. No use worrying about a break-even stop at there because the SAR is inside. So we take 200 there, and if price reversed, we still make another 35 pips. It's not ideal considering the market moved, wrong one, market moved down 517 pips, but what I'd show you here, as we come down here at the bottom, we had to pull back there, then back down, and we've moved that there. If I was trading this, and that was half a lot left, I would be bringing the SAR there. I know I can see what's happening to the right of me. I can see that, but I'd be more than tempted to lock in that 346. That's where it makes it hard to have a full automatic EA. Probably best just sticking with like a semi one, but yeah, I like to do the trades myself. I've already locked in 200 pips on half the position, and I want to lock in a lot more pips out of that move, especially when you had that, it's hard to keep on forgetting I haven't got my cursor, especially when you've got that up and pull back, even though technically it's not within the rules because that didn't happen as per the rules, but then we'll just continue on. So we're going up, there's your point of entry, we're back to a full 2 lots, or whatever you want to consider position, and we're going up again. See, not in play. And here's another example because that yellow line's not in play. So I've only got the 3 yellow lines in play. And what I was doing on my previous way of trading this, as soon as I saw a break like that, it just eyeball the chart, and I would be moving SAR there. But just let's leave the SAR there. Get this 4th line in play. Alright, all 4 lines are in play. Now here's your breakout there, and back into them. So your SAR's there, locking in profit. What's it moving up? It's moved up 280 pips. So what I'll be doing is I would have closed that half at the 200 mark, which is about there, roughly. And my stop, I wouldn't worry about a hard stop here. It'd just use my SAR, because my SAR is a stop. It is a stop and reverse. So up we go. I'll just quickly drag this out to about 10 minutes. Up, 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 And here we go. See, might have got a bit ugly there, because technically we'd probably be considered to be out and back in here. Not pretty with that wick, but there, then you would have gotten a bit of a losing, couple of bounce around a bit, another big move to the upside. So as I said, I like your thinking. It's something I can look at, but I just want to clarify a few things that you may have misunderstood with regards to once I close out at plus 200, then the stop is on the second part is either worst case scenario break even, or best case at the SAR if it's inside the entry point in a positive territory. All right, thanks very much for that.